Hello. So, you want to get started investing in the stock market, but you don't feel that right now is exactly the time to do so. Well, I'm here to tell you that I've been there. I invested in the stock market in 2007, and guess what? The 2008 financial crisis happened right after. So I put my money in right when it was above the dip, and I watched my portfolio tank. It was not a good feeling. I had a lot of people telling me, I told you so, because I put a pretty big chunk of money in at once. And it was not good. It was not fun seeing my portfolio down for so long and at such a low value, a low percentage of where I had put it in. And it took a while for it to recover, but recover it did. And on the long term, I did make a significant amount of the money, even though I was not in a position to keep on adding to my portfolio during the dip and during the crash. And I was it took me a significant time to recover, but over the time I did have a realized gain from that event. If you're thinking now is not the time to invest, you might want to reconsider. It could actually be a very, very good thing for you in the long run because you're basically buying stocks and ETFs at a discount. However, you must make sure you have a very strong constitution to survive through this event without selling. If you can, if you're a new investor, this might not be the best time for you to invest just because of the emotional aspect of the investment. I'm sure you can put the money in. I'm sure you could, make those transactions, but can you hold and be strong as you watch your portfolio tank day after day, not knowing when the bottom could hit? And that's really the test of things. So, in terms of is now the right time to invest, I think you really have to do some soul searching and think to yourself, can you not pull the trigger and realize losses that will affect you in the long run? If you can't not pull the trigger, meaning that you will realize those losses, don't invest. Maybe wait. But on the other hand, people get really excited when the stock market is up and they always want to buy when the stock market value is high, which means you're buying things at an overvalued price. So on the other hand, don't wait until the stock market is so, as they say, frothy and overexcited, too much, too high valuations going on. And on the other hand, you're buying something at a very expensive price, and then you'll have to see it correct, and then hopefully move forward at a more realistic price. So both ends of the extreme are not good, and we've just experienced both, basically. We just had a very, very high stock market, and now we're dipping into a correction, more than 20% down, if not more. And then, the best thing to do is to come up with your investment strategy. Obviously now with the tariffs, some of those investment theses, meaning your thoughts on your investments, why you're investing on particular ETFs or particular stocks may change or has changed because of these tariffs. So do take that into consideration. Just because a stock or an ETF was a good buy last month doesn't mean it's a good buy now because of how those tariffs may have changed the situation. So keep those things in mind. And what I want to say is, don't let this prevent you from investing. This is really just in the long term a blip on the stock market's climb. Historically, stock market has returned 10% annually, which means yes, some years will be up, yes, some years will be down, but overall, you should see something around 10% gains. Historically, this has been true for the past 100 years. So I feel for you if you're someone who is starting your investing journey now. It's definitely not the easiest time to get investing, but don't let this stop you. In fact, like I said, this could be beneficial to you because you're basically buying things on sale. But if you're someone who really does not feel that they are strong enough to not look at their portfolio when it's down, or strong enough to not sell out of a position when it's down, don't do it. I'm saying this for you because Those of you who already know yourself well enough that you just don't have that constitution to do that, save yourself some hassle. Invest in something, put your money somewhere where it's a lot more secure, something like a high yield savings account, which is getting at this time around high 4s to low 5%. And sleep soundly at night. I think that's the most important thing, is to make sure that you know where your money is, that it's safe, or it's doing what you want it to. You can put your money in something like crypto or the stock market. This could be the time that you will be making significant gains on the long term. So, to each their own. Personal finance is personal. That's what they say. And it's because everyone is a bit different, and everyone will choose what they do, their strategies differently due to how they view money, how they view the role of money of their lives, and also their mindset. There's a lot of aspects that go into this. The mechanics are not hard. The hard part is the mindset. And, that's where a lot of us get stuck. And, yeah, I really do wish everyone the best in this situation, and I'll see you next time. See ya.